Right. Well, welcome to Australian Reserve Bank humiliation hour. Honestly, what a bunch of idiots. And I seriously mean that. So this is what's transpired in the markets over the last, day or two, right? Here's a 4-hourly of the 2-year benchmark bond rate. So this is the bond that the Reserve Bank of Australia has been targeting in their so-called yield curve control program, right? And they've been targeting basically, 10 basis points, right? For a while on this bond. And they targeted it because it was a 3-year bond at the time. They ended up buying 30 out of the $50 billion on issue, right? So they ended up owning, the bulk of it. A lot of institutions just buy these bonds and bottom draw them, never look at them again, right? So they essentially held all the liquidity in this one bond. And they chose a 3 because that's what swaps and fixed rate loans were priced off, and they were also saying, well, look, we're not going to raise rates until 2024. This is an April 2024 bond, right? In the meantime, the market said, mate, we don't believe you, right? This thing had ticked down to 2.5 years, so it was less relevant in terms of the tenor. And because I owned 30 out of the 50 billion, it was less relevant, even less relevant because it was so small a free float, right? Then last week it ticked up to like 20 points and the Reserve Bank came in and bought $1 billion and pushed it back down to 10 points. They did that like 3 days, right, before CPI came out. CPI came out and everyone went, dudes, CPI is actually out of control. It's out of your control, right? And the bond went from 19 basis points up to 67. 50 points, right? And the Reserve Bank came out and did nothing. They didn't say anything, right? They didn't do anything. They just sat on their big fat one while the market basically humiliated them and said, you guys are now officially irrelevant. So the market in Australia has basically just done a 50 basis point rate hike, right? They've done a 50 basis point rate hike and the RBA has been completely unable to do anything about it, right? So that's the 2 years, right? When we look at the 3 years, right, let's just go out the curve a little bit. Right, look at the so this is the 3 years, right? So it's gone from hovering around 30 basis points up to 120, right? So that's 90 basis points, right? Over the last month, right? So this is during the month of October. Beginning of October is like 30 basis points, right? Currently it's like 119 basis points. So that's 90 points. That's on the 3 years, right? Let's look at the 10 years, right? This is what happens when a central bank basically loses, credibility. So over October, right, it's gone from 125, right, beginning of in late September, beginning of October, up to like 2%, right? So it's like 75 basis points. So it's across the whole curve. These rates have gone up. The official cash rate in Australia is still 0, right? But the curve has just exploded. And the market has thumbed its nose at the central bank because they've said inflation is here and you guys are going to have to act way sooner than what you thought. And of course the Reserve Bank, not just in Australia but globally, they're kind of stymied because they lowered rates to create inflation. Then when inflation has come, they've said, oh, hang on, it's transitory, it's not here to stay. And you go, but haven't you guys having a policy for the last 2 years to create this inflation? They go, well, yeah, but now it's created. It's not real, right? It's going to go away. The market goes, well, didn't you want inflation? Oh, yeah, a little bit, but not a lot. So, well, we've got a little bit. We don't have a lot. Inflation in Australia, it's like under 2, it's just over 2%, right? It's nothing like in the States. And they go, well, that's not enough. We want more. I said, I thought you said you only wanted a little bit. Oh, we want more than that. So they're going to sit by and do nothing, right? Inflation's going to go out of control and rates are going to go out of control. So that's Australia, right? And of course, what's happened in the equity markets is, this, right? So in Australia, I mean, this I think is probably just the starter, right? It's down 2%, today, right? Fell off a cliff, right? Let's get rid of some of this garbage here, right? But this is the kind of damage that is going to be done. Now, this, and this is what I think Australia is a sign of what could be to come in the US and other markets, right? This was the kind of trend that we were looking at before in these like dotted lines, right? Where it was an ascending triangle and we had a break. And in Australia, we didn't regain the highs. We've kind of done, this was one of the red lines in the sand for me. So I shorted this market again around about this time last night. It's about 12:30 on Saturday morning here. So Friday session US is about to start. So I shorted this before. It's like 74.21 where I shorted it. So caught this move. But similar to the US, it had been looking like this ascending triangle which busted, and then I was looking at it during the week thinking, look, maybe it's this trend. Maybe we're in this kind of channel, right? Maybe we haven't actually broken the trend. We've just gone to the bottom of the long-term trend. And I'm just wondering, right? I mean, these lines, they're always very subjective. Right? The horizontal ones are less subjective, right? Because they are price levels. The trend lines are a function of price and time. So inevitably, they are more subjective because you've got to take in a price over time. Whereas these levels, well, that's just price, right? So that's price, reliable. Price over time, less reliable, right? But so far, assuming this is the trend, right, we are headed to the bottom of the trend, and the way the rates have moved, we could be busting that. And it's the same story in America. And when we look at these rates, right, let's just take a little bit of a longer look at what really goes on in these rates. This is like let's go back a little bit even longer, right? Oh, you go, this will do. This is kind of what happens in the rates as far as why I think where we going, right? This is going back to 87 10-year bond rate, and really what happens is the rates rally down and they establish a level, right? So this is low and it kind of bounce off it. Then they break through that and they set up a new low, and they come back and they revisit pretty close to or add on that level they have established, right? This pattern happens time and time again, right? So here, we establish this level here. We then reach a new low. And then we come up here and we revisit it. Okay? Then we go again, right? Okay, so we've established, this level here, right? That's that new low. We go through to a new low. Okay? And then we come back and we revisit that established level there. Then we go again, right? So this new low has been established. We go and make a new low. We come back and we revisit it before going down again, right? And then this level is established. We make a new low and we have revisited it. Okay, so this pattern, it's the same in all yield curve, particularly long dated ones. You just see how it steps down and it basically sets up a level, gets a new low, comes back, revisits the previous level that it established, comes back, establishes a new low, right? Comes back, revisits it, establishes a new low, revisits it, new low, revisits it, new low, revisits it, new low. Now this is a bit different here, right? Because I think we've seen the absolute lows in these rates. So where's it going to go to in Australia? Well, it's missed that one, so it's going to go here up to 2.9%. That, my friends, is what's going to happen. When we look at the US rates, we can see a similar pattern here, right? Again, going back same time frame, 1982, right? there was this level established here, like a low, did a new low, kind of revisited that level that it established, right? Comes through. That then becomes the established one, hits a new low, comes back, revisits, that level. Like literally right on the dot, right? This is the new low. Sets a new low there, comes back, revisits that level that had it established, right? Okay. Then this level that was established, right? Sets up a new low, comes back and it revisits that established level. Same here, right? Establishes that new low, comes back, does a new one, comes back, revisits this established level here. I mean, the terminology is mine, not very techie, right? Here we've got this, established line here that was established by that new low, right? We get a new low, it's come back, and of course it is about to revisit it. And it'll get there, right? Okay. It's not there yet, but it's going to go to 2% in the US. Another 40 points, not that far away. How's that going to go with things like the NASDAQ? So when we look at the old S&P, and as similar to the Aussie, right? I was looking at this chart, and really the way I'd seen it for a long time was this, and I still think that's very legit, right? Because you clean out that noise here, that's the level that it bounced off. That was an important leg up. This was an important point. Same important points here that bounced off. Similar ones here. This was the famous 17th and 18th selling moments. There. And then when it broke it came back and retested and it came back, and you can argue, well, maybe it's coming back to back test that trend line. So maybe that is still the overall trend line, right? But then I was going to, the way I look at it, technical analysis, in these trends, you've got to look at, as things change, you've got to really look at saying what actually is going on in the market, right? And given this rejection, I'm going, well, maybe it's not that. Maybe it's this. And we're going to new highs, like up at 4,800. Maybe it is that. I mean, it has crossed this red line, right? Heading to new highs. But with the way yields are going, and if Australia is anything to go by, when the central bank kind of starts losing a bit of credibility, which has certainly happened in Australia, and there's a disconnect between what's going on in the bonds, the market, and what's going on in the boardroom of the Fed or the central bank. When you're not dealing with traders, they don't have any risk, right? They don't have any positions on, and they just have policy, right? These guys are essential politicians, right? They don't have any risk, so they just write their memos, and then eventually, there's a disconnect, and the market wins eventually. They say don't fight the Fed, but central banks as a whole have got a record of two things. One, digging their heels in and being very stubborn, but three, eventually they fold, which is what happened with Soros and the Bank of England, right? And when they do, it's quite spectacular. So we saw a bit of that in Australia today. I mean, the central bank really in Australia has got absolute zero credibility as far as rates go at the moment. They are broken, really broken. And, they're broken because their policy was out of step with the market, okay? And the US has kind of lagged the market, because when you look at US 10 years, which we just looked at, they've been starting to break higher in terms of yield. This is the 2 years, right? Now, this looks remarkably similar to the Australian 2 years, right? Where over the course of this month, it's not as severe in the US as in Australia, but it's gone from 22 points up to 56 points. So there's been like a 30 basis point hike, right, in the US already, right? In the 5 years, I'm not sure what the 5 years look like in the States. But yeah, well, we can see that's gone, not as much. That's about 50 points, right? From 78 up to 123. In the US, the 10 years, again, they're all in the same direction as what's been happening in Australia, but they have been lagging. And similar here, it's gone up from 60 points, like from the beginning of the year, like January, like 1%, up to 171. Even in September, August, September, it's gone from 114. So that's like a good 50 points at least. So there's already been 50-point hike in America, whether the Fed likes it or not. And that is obviously a concern for our good friend the NASDAQ, where it has, at the moment, that is looking like a potential classic double top. Market's just opening. It looks pretty strong this morning. Anyway, but maybe that's the trend that is going on at the moment, despite the longer term trend of, as I pointed out the other day, of something like this, where it has, boing, 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 whooshka, against support there and there. And of course, the last time that happened was back in the old .com days. If I get my chart, my levels here, it's roughly there, right? There is a remarkably sad similarity between what is going on there and what is been going on here in terms of breaking out of that range. I've got another video on that which kind of shows it a bit more clearly. But anyway, so that's probably it for my rant for today. But all I can say is we have seen in Australia a potential precursor for what goes on in the States. Again, this is 2-year bonds, very similar to the US ones, but the RBA in Australia has officially lost it. They've lost control of the rates market out of the curve. They only control the overnight rate these days, today, whereas like a week ago they controlled out to 3 years. So it is a definite game changer in Australia, and I think a sign of things to come globally. Okay, ciao.